Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of technical analysis. I figure you would like to take a look at charts before the beginning of next week, since over the last few weeks the market has been moving down pretty seriously and with volume. However, I do think that some of the large cap stocks that have been hit heavier over the last couple of weeks, such as Amazon and Shopify, have a unique opportunity to bounce in the next week or so. So let's take a look at chart and see what opportunities might be presenting. If you like my kind of analysis, please consider joining my Patreon page. That is where I share with my Patreons a lot more analysis on a regular basis, as well as some of the trade recommendations, entry and exit points. And also, please consider subscribing to my channel to receive more regular updates as well. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Without further ado, let's get right into it. So before we look at the individual ticker symbols, I'd like to take a look at the overall market through the ETF. So first of all, this is QQQ on Friday. It moved down a little bit over 1.5%. It is right now at $383, which happens to be above 50 days SMA. 50 days SMA for the QQQ is 381. So I think this is a good point for the QQQ to bounce. If on Monday it moved down past 381, chances are that would get it to a little bit of an extreme condition, and then it will bounce. Note that while the ETF is moving down, the RSI have been moving up slightly for the last couple of days, so that is a sign of divergence. On Friday, the volume was 335%, so it was pretty significant, meaning that there were a lot of selling activities on Friday. However, it was only down over 1.5%, which is not the end of the world for those of you who hold on to this ETF as your investment. I do expect QQQ to bounce. Now, I don't know if the bounce necessarily long lasting, as in entering the next bullish run, but it would probably bounce a little bit before deciding what to do. Right now, the next resistance point for QQQ is 390. I'd like to see it get back there on a first bounce. The all-time high for QQQ was $408, and it is now at $383. So this is not even a correction. Basically, it was only moving down about 6% from its all-time high. So QQQ does have more room to the downside should it continue to run down, but I do think that it does hit a very good support at 50 days SMA right now. With this RSI divergence, I think it could probably bounce a little bit before deciding on the next step. On the lower side, the 200 days SMA for QQQ right now is $354. So in the short term, if QQQ cannot hold 381, then it would likely get to 354. At 354, that would be over 10% to the downside, which is likely fall into correction territory. So at 354, that would have been a $54 from the highest point, and that would have been 13% correction. Still not significant enough if you are in the market as an investor a long time. 13% correction is nothing in the grand scheme of things. Let's also take a look at SPY. This is SPY daily chart. So as of Friday, SPY only moved down 0.87%, not even 1% yet. Although based on the price action for the last few days or last week is pretty bearish. The volume was over 200%, so it is pretty significant. The 50 days SMA right now is $453, which is right where it ends on Friday. This is basically about 5%, give or take, from its all-time high of $473. So this is not significant, and it is not considered a bear market by any means. It's a mini correction for all intents and purposes. We also note the RSI divergence here. So I do think that SPY will probably bounce a little bit next week. Here's the daily chart for Amazon. As always, Amazon would be the first stock that I would be analyzing outside of Tesla. I think that right now the RSI is at the oversold territory. Amazon did bounce significantly last Friday toward the last 10 minutes. So it tells me that there is a decent amount of buyers waiting to buy into Amazon. Right now, it is in between 200 days SMA and 50 days SMA. So it ended Friday at $3,389, bounced right off of 200 days SMA at $3,351, but it is still below 50 days SMA, which is $3,415. It's interesting because in a single day, it literally touched both 50 days SMA and 200 days SMA. When Amazon hit 200 days SMA, it would have been a really good opportunity to enter a call option a few weeks out to at least catch the bounce toward the last 10 minutes, but I was not available to enter that trade. That would have been a very good trade. Anytime the stock loses 200 days SMA, you could expect that it bounced really hard, at least temporarily. So that's what happened with Amazon. The volume was 112%. So it is less than QQQ and SPY, but it is still pretty significant. Amazon retraced from $3,762 on November 19th, all the way down to $3,337 as of last. So within a span of about 3 weeks, Amazon made about $400 move to the downside. This is a very good opportunity to buy Amazon shares if you are interested in becoming a shareholder or expanding your position in Amazon. Now, if Amazon for some reason moved down again and flirt around $3,351, I would be a buyer at that level, both call options and shares. I think that would be a very good point. Now, if Amazon loses $3,351 like Friday, that would have been an excellent opportunity to enter call options again. That is, of course, an optimal point. It is not the lowest point because you don't know the lowest point until it bounces off and it stay up here for a couple of days. That's when you know the lowest point. We can only look at call options at a potential optimal point, which is a strong support, and 200 days SMA is definitely a strong support. The next strong support that I can see here is $3,310, or also at $3,278 that I have here. But I'm not hoping for Amazon to get there yet. First, I'm hoping that Amazon would touch 3,351 again on Monday, so I can make an entry there. It could always go down below that, but I'm not too concerned because anything below 200 days SMA would be a very extreme level, and given that RSI is already at oversold, if Amazon gets down to below 3,351, I don't think that would be long lasting. We could play a bounce for the next couple of days for Amazon to bounce back up to above 3,400, and that would have been a good trade as well. Here's the daily chart for Shopify. Similar to Amazon, Shopify bounced from the bottom, and the bottom was $1,362 on Friday. It bounced pretty heavily, and it ended the day at $1,410. So that is about $50 bounce. The 50 days SMA right now for Shopify is $1,477. I do expect Shopify to revisit 1477 shortly, but once again, if Shopify for whatever reason retouches 200 days SMA at 1362, that would be a really good opportunity to make a trade for a call option. Now, Shopify had major oversold for the last couple of days and a RSI divergence. So while the stock is moving down, RSI is moving sideways, both at the oversold territory. Volume was 118% on Friday. All of this combined, it signals a potential divergence, at least in the short term. So I would be looking for an opportunity to buy into Shopify call for a swing trade as well. So unlike Amazon, I was able to enter a trade in Shopify right around the time that it got to 200 days SMA, and then I exit the trade at the bounce. I had hoped to hold this call option a little longer, but due to travel next week, I decided to take it off with a decent gain. So what I did was I enter a call option at around 8:53 my time, or around 11:53 Eastern Standard Time. So right when Shopify hit the 200 days SMA, the red dotted line here, and then I sold my call option at 11:43, which is about 3 hours later. So it is about 2:43 Eastern Standard Time. So 11:43 my time is right around here when it's about to touch the pivot line. So the move from here to here got me $950 in profit. It is a little bit over 25% in profit. I had wanted to hold this particular call option through the weekend, but that is admittedly a reversal play, and if I'm wrong, the stock could fall back down and I could lose all $950. So I wanted to capture the gain first. There's always a good chance that Shopify or the rest of the market would move down on Monday, first thing Monday, and then bounce back up really violently as a V-shaped recovery based on the RSI. That could be a potential outcome. So I decided to take off my trade first and see if there's another opportunity to enter a trade Monday morning if it does move down a little bit. So the trading range for tomorrow, Monday, for Shopify on the upper end is 1465. The middle pivot point is 1411, and the bottom pivot point is 1300. Note that if Shopify get to the bottom pivot point, that would be below 200 days SMA. And given the fact that we saw on the daily RSI hit extreme oversold, I do think that if Shopify get to below 200 days SMA again and potentially reaches the bottom pivot line here, that would be an excellent opportunity to enter a call option for a few weeks out to swing that. I think that would be a good opportunity for a reversal play. If you like this type of analysis and my thoughts on the entry and exit points, feel free to click the link down below and join my Patreon page, where I share a lot more regularly on my thoughts about the general market, as well as a certain stock that I like to trade and the entry and exit point. So feel free to check that out. And if you'd like to support the channel, buy me a cup of coffee, or just want to hear my analysis, Patreon page is the way to go. Roku is next on my list. I don't know if any of you is a Roku investor. I can do a deeper dive on the stock itself. I am a Roku investor myself. I have not held the stock for too long, and I have not had a major position in it. By far, it is just an average position for me, something that I'm comfortable with. But given the conditions in the market and the technical chart here, it looks like I might be adding more shares in the coming days. So for Roku, I also see an RSI divergence. The volume was just at around 100% on Friday, but the stock has been moving down drastically over the last few weeks. The death cross was formed here in September, so sure enough, Roku has been on the downtrend, and it has been very bearish for the last few weeks, coupled with the fact that the last earnings, the result wasn't stellar, so the stock has been moving down substantially. Now Roku is a stock that did really well during the pandemic, and it seems to be slowing down when we supposed to come out of the pandemic. However, I think with another variant of COVID that is looming, we could potentially see a return of users to Roku, and we could potentially see another run in Roku. From a chart reading standpoint, I think it has reached extreme oversold conditions a couple of times, but it still continues to sell off. I think it's on its last leg down here, and potentially it would be moving back up. Depending on how fast they could develop the vaccine for the new variant, and depending on how effective and what kind of policy the government will have in the coming months and weeks, it could potentially give us an opportunity to profit short term from owning Roku. So I personally would like to buy into Roku a little bit more. I might potentially consider a swing trade in Roku, but for right now, there is no sign of immediate reversal yet. All I see is a little bit of a divergence here, but I still think that Roku is on the downtrend. The next support point for Roku would be 185, and when Roku does hit 185, that would be a good opportunity to buy in as well. So that is where I'm at with Roku, considering that the all-time high for Roku was $490. 199 or 185 is a really good entry point, or even at 205, that's a really good entry point to hold Roku for it to bounce back up. I think it could easily bounce back up to 50 days SMA, which is 291. It is a significant move from here, but it is very, especially when we are facing with a potential lockdown or a potential pandemic, another pandemic within a pandemic in front of us. So a few of you asked me to look into Lucid. Lucid had a golden cross back in early November, and it started the run, but it has not been too hot lately. I feel like Lucid does not have continuous volume to continue going back up, but this could also be just a higher low, preparing for the next leg of a higher high. So right now with Lucid, the volume seems to be at around average for the last few days. I think that it is not too far from its all-time high of $64. So the next leg could potentially take out this previous all-time high here. For Lucid to be a good entry point, if you choose to enter Lucid, I think it has to retrace back to 50 days SMA, which is at $36. When it does get back to $36, that would be an optimal point in my mind to enter a trade, hoping for the next run. From a fundamental standpoint, I've shared before, I am a Tesla fan. I don't love Lucid's business model, so I would not be owning Lucid anytime soon. But I think from a trading or short-term trading or a short-term profit standpoint, I think $36 would be an optimal point to enter the trade. So here's the daily chart for NIO. I used to own NIO with an intent to hold it long term because I do think that the Chinese EV market is heated, and if anything, Chinese EV makers have the best opportunity to compete with Tesla. However, given the geopolitical and macro environment and regulatory environment in China, I didn't feel comfortable holding on to the shares, so I exited NIO, not because I don't believe in the fundamentals of the company, but I don't believe that the political environment is conducive to American investors, at least for the time being. But NIO has been dropping seriously for the last few days. This is probably due to DD being delisted out of the US. And I think it scared the market, right? Alibaba also moved down. If you are a investor in NIO and you wanted to hold the stock long term, I believe that NIO will weather through any kind of regulatory environment, and NIO will continue to thrive as a company. Now, whether or not NIO will be continue to be in the US for US investors to pour capital into it is an entirely different story, and I don't want to speculate. I got out of NIO for that reason. But from a technical standpoint, NIO is in extreme oversold condition. So I do expect NIO to bounce. If you're looking for a short-term trade, right now is a really good opportunity to enter NIO, whether call options or shares. Given the price, I think you probably just go with buying shares in NIO. The volume on Friday was 249%. So it was significant. A bunch of people sold out of NIO once again because of the DD delisting situation, but I think that too will pass and NIO will be thriving again in the future. I'm not sure if it's a near future or the long-term future, but it's definitely in the future. The death cross was formed the first time was back in May. Then the 50 days SMA curved back up and then move back down. So arguably the second death cross was formed in August, and ever since then NEO has been to the downside. Right now, once again, based on RSI, this is a very good support to enter NEO as a trade or a call option to bet on the bullish run of NEO. I think that in the short term, NEO will bounce, and the next price target for NEO would be 50 days SMA, which is right around $38. So you could enter NEO with that potential. I don't know when it will bounce though. RSI suggests imminent bounce. So I would probably go with shares and hold on to it for a few weeks, a few months out, and see what it can do. But right now is a very good point to enter NEO if you're interested in holding on to NEO at all.